Joining me now is Bill Simon, former Walmart U.S. president and CEO. Bill, it's great to have you here. Give me a little bit of your thesis on why you think the consumer is in control.
Hey, Courtney, good to see you again. Yeah, I mean, look, the consumer's, pretty flush right now. Nominal wages are up 4%. The inflation report today was relatively tame. There's been a lot of, dark news about tariff this and tariff that. And, it is a bit of a roller coaster. It's on, it's off, it's up, it's down. But in the end, the consumer decides, right? Like if the price of an item goes up, they buy something else, or they buy less of it, or they buy more of something else. In the end, Christmas is going to come, and it's going to be a good one. By all indications, going to be pretty robust.
We always talk about private label and the opportunity that exists for a number of the retailers that lean into it. I'm thinking Target's, also Walmart, your former employee. Kohl's brought it up a lot as well, as they're kind of trying to move more into the private label area than they have been more recently, get back to some of those historical levels. And to their point, they said, look, we've seen the consumer trading down. We think that trade down is going to continue. And so we want to be there with them to offer them a fleece at a lower cost than a national brand. What does that tell you? I mean, do you believe the trade down is happening as you're talking about consumers switching in and around these products?
I think there's trade. It's trade up, it's trade down, it's trade across. It's about value, right? You're seeing, the discussion around tariffs, particularly, and around inflation and more in general, is made the consumer, more alert and more aware about deals. And so, if an item, it might be a trade up, but if it's a better value, the consumer is going to buy it. And you see that a lot. And where retailers are getting hurt and consumer product companies are getting hurt are when they're trying to push through too much price. And you see that in some of the earnings reports. The consumer's just not going to buy it. They're in charge, they're in control, and they're smart.
How would you characterize some of the layoffs and the holiday hiring or lack thereof announcements? We just heard from Target that they are going to look at laying off about 8% of their staff, albeit corporate. So that's not in store. But by now, we would have really heard a lot of hiring announcements or retailers seeking to fill this many thousands of positions. And we haven't really. Does that tell you anything about expectations for the season? Are retailers not needing to staff up because stores won't be as busy as years past?
Well, I think there's a couple of things that are going on, specific to Target and in the intro, you talked to the folks at Kohl's. Those guys are really having a difficult time with certainly more than just their holiday staffing. And I think that's why you're seeing layoffs at Target and maybe a little more caution from the likes of Kohl's than you hear from Dixon Academy and Walmart and Costco. They're just in a better place. I think that there's also, increased use of technology, self-checkout, and of course, the consumers buying more and more online, and retailers with both physical and digital presence like Walmart benefit from that, and of course Amazon. And so I think that's probably why you're seeing that.
I continue to be surprised at how well both retailers and consumers, frankly, are managing tariffs and the higher cost. It seems as if retailers have figured out ways, maybe a bunch of different strategies compiled together to kind of mitigate through so that when the pass on happens, it's perhaps not as tense as it could have been. But consumers also still, for the most part, seem to be largely taking it on the chin. They're buying what they have to buy to get through it. What do you make of where we are right now with pricing, with inflation? We know the holiday season is always promotional. It's sort of the name of the game. What should consumers expect?
Certainly you're starting to see item level price increases that are driven by tariffs. If you have a product that, is coming from a heavily tariff jurisdiction, that price is going to go up. But where you see the ability to mitigate it, and Walmart made an announcement earlier this week about and I'm pretty proud of them for this, the price of their Thanksgiving dinner has gone down. They're able to take the costs that come in certain elements from tariffs and other things and spread it out over a larger base of products and mix it out. So the actual basket of Thanksgiving dinner is lower than it was last year. And so if you've got the retailer doing that, the consumer is also going to do that. So they're going to spend more money on X and less money on Y. And when Christmas comes, they're going to make sure their family has a great Christmas. They're going to make sure Halloween's delivered and Thanksgiving's delivered. They mix it out the same way retailers do. So all in all, when it goes through the system, The impact of tariffs may be 100, 150 basis points, but it's not going to be tragic. And it's certainly going to be something that consumers are going to be able to manage if the nominal wage rates stay up 4% or so, which is where they've been.